should we call it the Malema Bill? Well, it is a bill that is before Parliament at the moment. It is being debated in the National Assembly, and the debate happened last week. And I think at the moment it is at a place where, there is also conversation about public participation in the bill, having been engaged it. And some people are calling it the Malema Bill, rightfully, because maybe it's something he introduced. He introduced it in 2018. It lapsed. He revived it again in 2019. It's set for public hearings in 2020, and then of course it sat dormant for a while, and now of course revived in 2023, and we are in 2024. What is it? It is of course change of ownership that is being proposed of the South African Central Bank, the South African Reserve Bank, and of course the South African Reserve Bank operates within an act, the Central Bank of South Africa, and that particular act is Section 224 of the Constitution, and it has a mandate with various things that, of course, it needs to do. So that the Constitution of 1996, Section 224. What does it do? It protects the value of the currency in the interest of balanced and sustainable economic growth. It also performs its functions independently, without fear, favor, or prejudice. Yeah. So what does it do? We'll engage all of the other things about where that debate would happen, or why the debate is happening, or whether it's a debate to have at all. And if so, what is the meaningful debate then to have around the South African Reserve Bank? What is your understanding of it? And do you even have an understanding of what the changes would mean if there were changes that changed it from, in essence, what it is now to nationalization of the South African Reserve Bank? Would it have any changes or impact at all? Professor Christopher Malakane is my guest, and Associate Professor of Economics at the Wits Business School. So going to help us out with this conversation. Prof, welcome to Power 98.7. Welcome to Power Perspective. How are you, Prof?
I'm fine, thanks. And how are you, Denzel, and to the listeners? It's an interesting debate.
Yeah, and I'm hoping you have all the answers for me, Prof. Anybody who comes to a conversation with the title of Prof, well, there is an expectation, Christopher. So let me ask you, Prof. And this debate has been, ongoing for a long time, the South African Reserve Bank. And some people have engaged it casually, some people have engaged it seriously, and, some people have even debated all of it and why and where it comes from and all of those things. And I'll go into maybe a little bit of the history as well of how it came about. But let's just start with this question. Some argue that any of this is, and for reasons we'll debate within, the next 40 minutes or 45 minutes or so, that it's really, some will argue that it's much ado about nothing, that it's inconsequential because, of the shares and the shares price and the dividends and the kind of roles that foreigners would play in the Reserve Bank, and or the kind of functioning they would have, their limitations, and the kind of commitments that they have to the Reserve Bank. So I'll ask you firstly, much ado about nothing or much ado about everything?
I think it's much ado about everything.
Yeah.
Actually, this discussion about the ownership of the Reserve Bank started in 2010. I wrote an article then in 2010 calling for the Reserve Bank to be state-owned. And I remember I was condemned, by all sorts of people, but I made some arguments then. And then Prosato, through NUMSA and adopted a resolution on this. And then proceeding further, and the EFF was formed. And the EFF took this resolution as its own resolution and moved forward. And then 2017, the ANC adopted it finally as a resolution as well. And then we see the EFF then bring it forward in 2018. And that's where it really comes from. And the issue here is that the Reserve Bank or the central bank in any economy is at the apex of the financial system. And the financial system is like the nervous system of an economy. It performs a public function. Without the financial system, economic activity is disrupted. And if you don't have control of the financial system, not just control, but also ownership as a nation, as a state, of the financial system, and particularly the Reserve Bank, then you run the risk of your financial system being manipulated by private interests. You know, maybe we'll go into detail as to why the central bank is so important.
So no, it is a you know, an absolute important institution, and you know, hence we're looking at it. If I went back to the historical context of it, and when it was established in 1921, right? And opened for business actually on the 30th of June 1921. And the result of that was a direct result of what was then being said, the abnormal monetary and financial conditions that were World War I, and what World War I had brought. Also, the central bank, the SARB, is the oldest in Africa. And its formulation then and its formulation now, depending on the directors, and people will, and sometimes when I look at the directors, there's 14 or 15 or 11, and 7 of which, including the governor, 3 deputy governors appointed by the president of South Africa. Some places say 5 years, and some places say 3 years, in essence. It's the role of the directors that I'm interested in also, in relation to this. So there's an aspect of foreign ownership through the shareholding, and through those directors. But let me get to the monetary aspect firstly. 2 million rand issued in shares. It's one of only 8 banks worldwide that have shareholders other than the government, and I'll go through all of the others. The dividends are what? 5 cents a share dividends? Almost no financial value, profits to this, to those who would sit and those who would have shares. So from a monetary aspect, from a financial gain aspect, let's just have an understanding first, because is there an understanding, or am I reading things the wrong way, that says if I had shares in the South African Reserve Bank, because you obviously, might come and say the argument is bigger and broader than that. It's about ownership and not merely about, the financial gain. But I want to start with the financial gain so that there's clarity on it as well. If you had shares within the South African Reserve Bank, and almost 5 cents a share dividends, and you only were allowed, I think, the most shares you could have, no single shareholder can hold more than 10,000 shares individually. Those shareholders would go up from 696 to, I think, at the moment, I think there are 800 and something odd, depending on how shares go up and down. What's the monetary value for anybody who has an SARB share?
The share price, as it is stated in the financials of the central bank, of the Reserve Bank, are not a true reflection of the value of the Reserve Bank. Because remember, the Reserve Bank has got power to issue currency, and this currency is not redeemable in gold. So basically, the Reserve Bank has got power to create money out of nothing.
Yeah.
Because of that, then the Reserve Bank, through that power, can acquire assets. So the value of a company that has got power to create money out of nothing cannot be 20 million rand. Because it can create that 20 million and more. I mean,
no. I totally. Yeah. I'm very, very aware of the role that it plays and the financial component to having a share. And the very valuable role that it plays, because it needs to play a developmental role as well, and I don't see it playing its development role right now. At the moment, it's playing a regulatory role, if I'm not mistaken, and not a development role. And yet, developmental aspects are written into its constitution and its being, in essence. But from a dividend and profit aspect, not much, right?
Yes, true, not much.
Yeah.
So the value of the value to private shareholders of the Reserve Bank, particularly the ones that are influential, like the banks and the pension fund, insurance companies, and some influential individuals who own shares in banks, is that they influence the way the central bank operates. For example, you're talking about developmental role, developmental financing, right? If government, for example, wants to finance building of infrastructure in communities and so forth, and it were to go to the Reserve Bank to borrow, right? Most probably it will get a loan from the Reserve Bank at a below market interest rate.
Reduced cost,
Yes.
Government borrowing,
And that takes business away from the private shareholders. So whoever has to be a governor or a deputy governor of the Reserve Bank has to be approved by the private shareholders or the board. So the president, for example, cannot unilaterally decide that so and so is the deputy governor, this one is the governor. The board needs to agree, because the act is clear. It says that the president, after consultation with the Minister of Finance and the board. But if the board disagrees that Chris should be, and says that Chris should not be the governor, then there's a stalemate, you see. And the democratic government does not have sovereign power over a strategic institution, can be blocked by the presence of private shareholders in defense of their interests.
And I wanted to, and Prof, I was going to go to that later, but I'm there now, because you raised it, right? You raised the impact that foreign individuals have, the shareholders would have, the bankers, those foreign nationals, and who ultimately wholly owned by those foreign nationals, in a sense of
and private South African.
So trusts as well. So trusts and individuals, right? Those are the individuals that own the Reserve Bank. And let's get into the politics then. And you were saying the president has the ability to appoint, but of course there is the board. And things don't happen with the board, the directors and the board at the Reserve Bank. The argument, and maybe the argument, right, and I'm always going to play devil's advocate with you, Christopher. The argument that some people say right in the beginning, people understood the dynamics of having political influence over something. If you would put it in the hands of the government through the finance minister, in essence then, you would be engaging an element where politicians would be able to engage the Reserve Bank in ways that we might not have liked seeing some of the history that we've seen in the country and some of the examples that have been there. Cyril Ramaphosa, the president of the country, talks about, the the wasted 9 years, and we've had state capture, and we've had all of these particular things where, institutions of finance were hijacked or wanted to be hijacked. And the big argument about the Reserve Bank is that whole essence then of operating within a capacity of without fear, without favor, without prejudice. And that particular functionality in the hand of a politician, and I'm playing devil's advocate with you, that functionality in the hands of a politician of any ruling party per se takes away its independence, and that is written in the Constitution, and also the aspect of fear, favor, or prejudice within the constitutional aspect. What do you say about that particular argument that says the authors knew what, politicians are likely to do and who politicians are when they do engage in financial, institutions?
I understand the problem of political interference.
Yes. And you cannot judge and say, I know that we're going to get a good president in the next 5 years, because we don't know.
Yeah. So the starting point is to note that private ownership of the central bank is an anomaly, is an exception.
Yes.
Globally.
True. Yeah, true.
So 99% of central banks in the world are state-owned.
Yeah.
And therefore, when you look at banks such as the Bank of Canada, Bank of England, the Australia, Bank of Australia, Reserve Bank of Australia, New Zealand, you name them, India, there is a framework that we understand to say central banks need to be operationally independent from government. And I'll explain that. But globally, central banks are not policy independent, because central banks are implementation arms of government. They implement the policy of government. You see, so for example, inflation targeting.
Yeah.
Inflation targeting does not come from the Reserve Bank; it comes from the Minister of Finance. Then, the Minister of Finance says implement this monetary policy. Then, as to how the central bank operationalizes the implementation, that's where the independence of the central bank comes. So we talk about operational independence vis-a-vis policy independence. It's not like the independence of the central bank must not be equated to the independence of the judiciary. That is independent proper. This one is a state, so is an institution that performs state functions or government functions. So it has got limited independence in that sense. So
I'm with you.
I'll give you two examples. Recently, the central bank, the SARB, has come up with different measures of inflation in order for it to track the underlying inflation rate so that it can set interest rates more efficiently in targeting inflation. You see, that is a technical, operational purview of the officials of the Reserve Bank. That is operational independence. So they can come up with some technical, efficient ways of implementing a policy that they got from government. So that's what we mean by when we say central bank independence. We mean operational independence, not policy independence. So ownership of the central bank does not temper with that.
Yeah, and not even we're not even talking about, in relation to, what the country dynamics look like, black, colored, Indian, whatever, and there probably is no reflection of that as well. I'm not even sure that, within the conversation we're having, we could actually even get to a point that says, how many black South Africans actually own shares of the South African Reserve Bank, because I think it's an impossibility at this particular moment. And yet the argument is that it should reflect significantly, what the South African dynamics are.
Yes, it should. but our struggle, David, was not a struggle that was mainly geared towards individual enrichment.
Yeah, true.
There are certain parts of the South African economy that, when you look at all the liberation movements of the country, the consciousness, Pan-Africanism, even the ANC, there's a broad agreement that these parts of the economy need to be state-owned, because they need to be owned by the people as a whole, not certain section of individuals. Those parts of the economy, part of them is the banks, the financial system, particularly the Reserve Bank. So that the mines, what gives me the right to own a mine in South Africa? When this is a resource that should be owned by the people as a whole. You see? So the Reserve Bank is in that area of institutions that should not be owned by individuals or groups of individuals, but must be owned by the people as a whole.
Christopher, let me ask you just on a different point. And as we just niggle at some of the issues that are engaged around the South African Reserve Bank. So we've got foreign nationals who do have shareholding within the Reserve Bank and what their roles are. And when I look at their roles, for example, and people say we should not leave an entity as an institution of significance as the Reserve Bank is, whose mandate can change lives, and there should be a necessity, to be owned by South Africans and Black South Africans, in the majority. So the role of those individuals who then do own shares. Let me just read something to you then that I have an understanding of. Their only involvement is in attending the AGM and voting for the 7 non-executive directors that would sit there, and appointing an external auditor in relation to that as well. And then it says, have nothing to do or have no involvement in determining monetary policy, financial stability, policy, or regulation and supervision of the financial sector. That is what they are not allowed to do. So their role, they can appoint and have a say in who the auditor needs to be, the external auditor, and they have a role to play in who those 7 non-executive directors should be. But other than that, the regulations and the constitutional obligations and the policies and everything else says they have no rights or involvement in determining monetary policy in whatever way. So what would the significant changes be other than, us needing a developmental central bank in South Africa who could do the things we were talking about earlier: finance government spending, reduce the cost of government borrowing, capitalize development finance and institutions and that. If other than that, what is this massive role that they are perceived to be playing but actually don't play?
It's about influence and power. So if you look at the shareholders, I think some 5 years back or so, they just increased the number of shareholders. As a way to deflect the calls for the state ownership. But amongst the shareholders, not all shareholders are equal. You see, even if they've got limited shares or equal shares, they are not equal when it comes to influence. So among the shareholders, we're talking about Mr. Rupert, we're talking about the Oppenheimers, we're talking about the banks, big institutions. So when those representatives of those institutions stand up in a meeting,
and I think there are 830 shareholders as we speak.
But of those 830 shareholders, a few are influential, representing these powerful institutions in the economy. If those ones stand up and say, Denzel should be a member of the board. It's very difficult for someone from a corner there, from some village who happens to be owning a share to say, I oppose that nomination by the bank, so and so. Because the consequences of doing that after the meeting.
Yeah, and some people can't even make it to the AGM.
Exactly.
Yeah.
Exactly. Now, as we spoke before, it is like the South African Reserve Bank is a private entity. It got a tender to perform central bank functions. You see, and this tender has been encapsulated and constitutional. A monopoly of that tender has been constitutionalized and cast in stone in the Constitution. Yet, this is a private entity that is performing central bank functions. So that is why it has no power, to change monetary policy. Or regulations. Because it has a tender to implement policies of government. But how it implements these policies and some of the things that it could do that it is not doing, right, is a function. And this is my argument, the political economy argument, is a function of the private shareholding of the central bank, because the central bank cannot pursue a developmental mandate, for example, to the detriment of the interest of the influential private shareholder.
So why, Christopher? Why those who own it, right? Who own these particular shares, and even or their proxies, right? Why are they so adamant against relinquishing their ownership? If you could put it to one thing, what is it when obviously at 5% dividend? I mean, come on, that there's nothing going to happen there. So if there was one thing why those who own the shares are so adamant against relinquishing ownership, because and then after that, I want to talk about the role of the SARB, because there's the continued inflation aspect, and then there's an employment, a developmental role, and I want to go there next. But is there, because why hold? And if you could just for me and the listenership, just give me one good reason and say that's it, because these guys don't want to give it up because that's it.
Okay, so suppose I'm the owner of the shares of the Reserve Bank, right?
Yeah.
And I own a bank.
Yeah.
And in my bank, I make money by issuing loans to ITC, Land Bank, DFIs, and to government. So government institutions.
For example, the loans that came through COVID. Yeah.
So I make a lot of money from lending to government.
Yeah.
Right? Now, here comes the central bank who says that, no, we as a central bank are now going to advance loans directly to the ITC and directly to the DBSA. Basically, they are taking away my my market, you see. So that is why they would oppose the shift of the central bank to the state, because then the government will have 100% control and decision making without having to consult the private shareholders there. To pursue a developmental agenda.
Would the COVID example be a really, really good one, where the South African Reserve Bank makes money available to government, but within that particular aspect, it has to go through the private institutions, and the private institutions don't spend the money for whoever the beneficiaries should be, because they then apply their own rules as to who's a good lender, who's a good borrower, who's a good customer, who's not, and then decisions are different than the ideas that were conceptualized in the beginning.
100%. 100%. Because if you look at other central banks, what they did, for example, they would give 0% interest loans. They would allow even households that had mortgages and people are losing jobs, right? Instead of people losing their houses, the central bank would intervene and say, no, we're taking over those mortgages and allowing households to refinance the mortgages at 0% interest because we are in a crisis here. Same thing happens to businesses and so forth. No, but you can't allow that to happen because if the private shareholders are there defending their interests, making sure that all the time, whether there's a COVID or there's a global financial crisis, the interest rate has always, in these targeted sectors, always has to be positive, regardless of the performance of those sectors, whether you've lost your job, there's no sensitivity to that. But if you have a central bank that is state-owned and the state truly wants to intervene to alleviate the financial burden of people and businesses during a crisis, then it can do that without being limited by having to consult the private shareholder.
Yeah.
So that's the problem. Yeah.
Did VBS give the conversation a bad name?
No.
And I could also say Steinhoff and all of the others, but here's an institution, a bank for the poorest of the poor, mainly women, and it's their legacy component that finds itself within that bank, looted by individuals who themselves were already rich, who themselves had already money, and broke a bank to the benefit of themselves and their own fortunes. And it could be a different story, but the smell around VBS just begins to be a smell that reverberates around other conversations and other things as well. And then there's a trust element to things that come in and say, if left to the elements of politicians and or some of these rogue individuals, this is what could go wrong.
Yeah, but you see, VPS and the African Bank, all these are banks that failed.
Yeah.
You see. But who was supposed to make sure to supervise these banks, to make sure to keep tabs on these banks? The institution that was supposed to raise alarm. They have what you call early warning indicators.
Yeah.
Of a bank that is facing imminent collapse or is being mismanaged is the Reserve Bank. So of course, left on their own, banks or bankers, commercial bankers, they are profit-seeking institutions. They'll always take excessive risks and sometimes even mismanage the banks because of their selfish, reasons. But the Reserve Bank is there, the central bank is there to regulate those types of behavior and to block them from happening, to prevent them from happening.
Are you Christopher of the opinion that it failed miserably in that particular space then? Because how we got to that position, even though the signs were there and the Reserve Bank at various points would argue that it highlighted and engaged and tried to intervene and all sorts of things, but things happened. So would you be one of those proponents who says, failed miserably at the first hurdle that you were really given?
Yes, the early warning signals, early warning systems for banks, it means that they were not robust, because if you see that this bank is going towards a collapse, towards a crisis, right, you can immediately suspend its license, because it's not complying. And then in that way you save a depositor.
Would Steinhoff be in the same category where early warning signs should have been picked up as well? Is that something that falls within the same category?
No, Steinhoff is not a bank.
Yeah, no. Yeah. But I'm talking about the financial, mismanagement, financial warning signs of an institution that generally would be picked up in these kind of ways.
Yes, any warning system, Steinhoff should have been picked up, particularly by the PIC, because the PIC invested a lot of money there.
Yeah.
So they needed to have any warning systems. Like when you invest your money in an institution, you must always have a way of tracking how well the institution is managed and performing. If you don't have those systems, those criteria to say, no, I'm getting out, I'm disinvesting here, I'm investing elsewhere because of the risk, then you run the risk of losing a lot of money, you know. So generally, these early warning systems are there.
Yeah.
And maybe the central bank will have, the SARB will have to explain what happened to the early warning systems, you know, when it comes to VPS, African Bank, African Bank. Yeah.
What is the South African Reserve Bank, the central bank look like, Christopher, as an agent of development? You know, I keep on bringing it up because to date only it's continued that role of inflation and not employment and supposed to be developmental and not just regulatory, like I said earlier on as well. So what does a reserve bank look like as an agent of development?
Yeah. So for example, when it comes to monetary policy, right, you can still have inflation targeting. It's not a problem. But then when it comes to developmental aspects, you would have a central bank that, for example, creates funding directly to fund industrial development, entrepreneurship. You'll have a fund for agriculture where you support farmers. You know, you'll have a fund for, even in the context of South Africa, entrepreneurs. You'll have a fund for small business. The Reserve Bank of India, the RBI, for example, even has a fund to fund health facilities, education facilities, infrastructure. They also even have a fund to fund provincial and local governments. So they have a credit line directly, the RBI. So it's a vast. So I remember at one time I was given an opportunity to speak to a gathering of Reserve SARB officials. So after I spoke, one of them stood up and said, "But Chris, you're suggesting that the SARB should be a big DFI, Development Finance Institution." I said, "Yes, it should be." That's how it looks like, you know. So this thing, and also then, you know what is painful?
Yeah.
You have a situation where you've got townships underdeveloped, and no infrastructure.
Yes.
You have got rural areas, you know. So we can't, you know, to say government.
And yet we have this agent that could make so much change.
Exactly. You know, I mean, this government borrows currently from the financial sector, private financial sector. It pays about 10% interest. You see, but government is borrowing this money to build the schools, you know, to build infrastructure, to develop communities. Pays 10%. Now, if you have a developmental central bank, it will lend to government at below market, at below that 10%.
Sure.
Maybe even at 1%, maybe at 0%, you know.
Yeah.
Because it depends on the responsiveness of the need for development in various parts of the country. Yeah.
Are we using the wrong language in the debate? Are we in the changes that we want? You know, when people talk about expropriation of private shareholder shares without compensation, that is the language that is used. If you use the word nationalization, people run away and run a mile away, and you know, foreign investors start looking at you funny and going, "What's going on in your country?" You know, nationalization, expropriation, you know, without compensation. If the debate was couched in a different way, as you know, a debate about developmental and forward-looking and constructive, do you think there'd be more progress made than, you know, a knee-jerk reaction, for example, from the DA that says we are resolutely opposed to the independence of the South African Reserve Bank and we are opposed to it, and all of the sudden things, because within the terminology there's expropriation, there is without compensation, there's nationalization, and we know what that debate in 1994, 1993, 1994 did around nationalization. The ANC dropped that particular term pretty fast when the international world said, that's not the way you're going to go, you know?
Yeah. No, I don't think it's a question of language. Because even if you change the language, you try to couch it.
Yeah.
People who know what you want to do.
Yeah.
You know, but I think
can't we just say we want to take it from you nicely, and you must give it to us generously so that we own it.
Yeah, we say it must be, you know, the way the Freedom Charter couched nationalization. It must be transferred to the ownership of the people as a whole.
Yeah, no. which is nationalization. Yeah.
Yeah.
So you're saying, Prof, that whether it's written in a different way, couched differently, put differently in any way, people would still see it for what it is and still have a resistance to it.
The cat is out of the bag.
Prof Christopher Malakane, I'm going to say thank you so much for letting the cat out of the bag. Me and you have let the cat out of the bag here tonight. I think the secret is out. Whichever way you have this conversation, it is what it is. Prof, thank you so much for coming on to Power Perspective. It's been a pleasure chatting to you.
Thank you very much, David.
Professor Christopher Malakane talking to us there. And, of course, Associate Professor of Economics at the Wits Business School, Professor Chris Malakane, talking to us about the reforms at the South African Reserve Bank, and talking in a way that I think and I hoped was a bit different than the normal conversations around the South African Reserve Bank are held. Because, you know, what sometimes is not understood is what does it mean? What in the end does all of it mean? Because so many people would also argue and say, you know, is it just inconsequential from the beginning and much ado about nothing, and you know, financial gain is, you know, what to all of that, and the role of the shareholders and the board and the directors, and minimalistic if not, and then there's the bigger role that the Reserve Bank can play.